Okay, y'all, I thought it wasn't recording because my sound was on mute and I just so happened to look down and I saw the little orange light and I got nervous. But anyway, so you have consolidation, right? You have, or you know what, I don't need to do that to myself. Can we duplicate? Yes, cool. Okay. So we have price consolidating, right? And we know that it's just giving us this noise in between these two areas here. There's no trend, there's no sellers, there's really no buyers. And the thing is that on higher time frames when you see consolidation on like a daily or a weekly, usually you could still trade in that within that range, but I don't recommend it because it's actually very risky because there's no trend to follow. So just keep that in mind. So like I'll show you a quick like example in the live markets in a minute. But right now we see that prices just kind of up, down, up, down, up, down. We don't really have much context here on, where price is going or where it wants to head or anything else. And we'll go, we have to just kind of accept what the market is showing us. But in this case here, if price decides to break above this area here, right, then we also know that in order for us to consider this a valid buy, and I'm going to make this green, in order for us to consider this to be a valid buy, we would actually have to wait for price to retest the area that it just broke before we can accept a buy. And the same thing goes for a sell, right? Let's say that um, price closes below here and it's the sellers are in control at this point, but now we need to wait to see price retest this area of consolidation and just wait to see if the sellers or the buyers are actually in control at this point. So you really just need to wait. Honestly, patience is a real tricky thing in the market because you also don't want to miss out on any opportunities. And I'm a firm believer that if you use FOMO right, which is also considered to be the fear of missing out, then you can always find opportunities in the market when it allows you to find them, right? So in this case here, this is just for illustration purposes. Again, if we had sellers to, it would make sense to just do this here. Okay. So you have all this noise going on, and then you have the sellers come in, close below this range or whatever, and then you have price to retest the range. You now have something that solidifies your idea or what you see to say, okay, sellers are in control. We're going to go ahead and take these sells. So there's that. Now, consolidation consists of equal highs and lows. Never trade inside of the range. Wait for closures outside, above, or below. So remember, you don't necessarily need to marry the idea if the market are in buys and you prefer to catch the retracement or the pullback or the correction phase, or whatever you want to call it. If that's what you want to do, you're more than welcome to do that. That's your prerogative. Just understand the risk that comes with that. But if I were you, I would just wait and see what happens and then go from there. Patience pays. And I'm learning that the hard way these days. So let's take a note. Let's take a beat. Let's take some notes, right? So tip number one, when trading, always remember the trend is your friend. So again, if we refer to these diagrams or these diaphragms here, then we see that this is currently a bullish market right here, right? We see that there are buys. We see that price has just been kind of retesting the same area over and over again, and it hasn't necessarily closed below it. and we're just waiting to see what happens, and we'll just kind of go from there. So in this case, if price decided to close above here, now we've had, it doesn't really become a higher high until price has decided to come down and retest the area. If it doesn't retest, and sometimes the thing is about sometimes retests don't happen. Sometimes they either they don't happen right away or they happen later and the retest becomes a lot deeper. So let's just say that this was gold, right? And let's say that this particular area here, price just broke all the way up here. We would still kind of want price to do some type of a pullback somewhere in this area here, because that impulsive move is going to cause, it calls for the market to come back down to this point here anyway, right? So let's just keep that in mind, and let's also keep in mind that the trend is your friend. Now, again, if you're going to trade the pullback, that's fine. You, at that point, you would just need to know how to find the levels if you're going to get in during a point of a pullback happening, but I wouldn't recommend it. I would just wait for the pullback and then get in at that point. So then you would be buying from the higher lows, and you won't be buying up high. You'll be buying here at the low. You'll be selling up here from the top at the high. So in this case here, this is a downtrend. It's not going to be perfect, but illustration purposes, this is a downtrend. So give me a second, hold on. Yeah, so now you have this downtrend, and you have these sellers sitting up at these areas of lower highs. So at this point now, you just wait for price to pull back. We know that prices, if it just stays below this area, we'll get in, we'll sell down, right? So always remember that the trend is your friend. There's nothing wrong with, again, if you're going to choose to trade in a correction phase, fine. Just be smart. I don't know how else to say it, because at the end of the day, how you trade is your business. You know, if you're a person that doesn't really want to wait on the trend and you want to go wherever the market is going, whether that be an impulsive move or a correction phase, then that's your business, you know. But just be smart and understand the risk that goes into that. Remember that I did put this on here. Okay. Remember that support and resistance levels are interchangeable. We treat these as major key levels. Key levels can be identified as either supply and demand, support or resistance, or just that. They're key levels, right? So don't overcomplicate it. If it's a key level to you and it just makes your life easier, because then you don't have to try to figure out what supply and demand is, or you don't have to try to figure out support or resistance if that's just not your cup of tea. There's nothing wrong with that. You know, I highly recommend just doing what works for you, because you're the one that has to trade in the markets and in certain conditions, so you have to find a way to make it make sense to you, right? You don't have to avoid consolidation completely. You do, however, need to be patient while waiting for price to make up its mind. So again, in the example that I just showed you with the consolidation, if price chooses to, you know, say, okay, we don't want to see buyers anymore. At this point, we want the sellers to come in. They close below. Now, we only accept the sell if price comes back up and retests the level that was created. And in this case, we would then wait for that lower high to be confirmed. That would be in that retest, and once it's been confirmed, then we say, okay, we're going to get in for a sell, set your stop loss wherever, set your take profit wherever. So you don't have to avoid it. If anything, I would pay attention to consolidation phases. I wouldn't just like completely ignore them. Like some people are like, oh, you don't have to pay attention to it. It's kind of like, you sort of kind of do. You need to know what's happening. You have to see that the market is indecisive right now. And not only that, but with it being indecisive, with it being indecisive, you also have to just be mindful of the fact that you just now have to wait for it to make up its mind. And so that's why it's easier to find consolidation phases you're going to see them all the time in the market. The market doesn't never consolidate. You just have to know what time frame to go to find them, and what time frame to go to trade them, or pay attention for those breakouts and retests. Um, when price shifts and begins to change direction, we're looking for price to close below a higher low, which will transition into sells from buys, or we're looking for the close above the lower high to shift from sells to buys. So in this case, that leads us to our next example. So I'm going to just put an arrow here so you can, no, let's do the double one. Okay, so in this case here, we're going to talk about market continuation. So really what this last tip here, and I didn't put a tip here for continuation, so I'll just kind of do it as I go. But we could just put another one. At this point, now we're talking about reversals and continuation. Now, the thing about reversals and continuation is that they're very they're not the same, right? Continuation is literally that, right? When market is getting ready to continue trends, we have to wait for price to close above and or below previous highs and or lows, or swing highs and lows. And we'll talk about swing highs, swing lows, liquidity sweeps, and all that stuff, key levels next week. We're not going to do that this week. This week, I want you to just get used to identifying higher highs, higher lows, higher highs, higher lows, lower highs, lower lows, all right? So we're looking for price to close above previous highs. So in this case, this created a higher high. Now we have this higher low. In order for us to even understand or accept this as a higher high, now we have to wait for price to close above it. And in this case, it did. It came up. It said up. We're the new high up here now. How do we validate that high? We have to have some sort of a retest to happen to the area that just previously got broken. So in that case, now we have created a new higher low. Once the higher low has been created, you can now buy at the end of this retest and then get in and ride price to whatever the new high would be, right? So if you missed out on getting to this one, you now have an opportunity to get in to ride price up to this point here. And that's why I said make sure you look left, because if you look left, you can then pinpoint where price could potentially go if it continues to go up in this trend here, if it continues to create these new highs. So now we have higher highs, we have higher lows, and we're just in an uptrend right now. We're just kind of waiting for price to do its thing and continue to make the structure necessary for us to know what the next step is, right? So that's pretty much what it means. And so the same would go for lows. So let's just, for the sake of illustration, let's say that now this and what would also be a good indication is that if price starts to create equal highs and equal lows, you have to wait for price to make a decision, because sometimes price might consolidate before it wants to break above the new high to retest it. So when it starts making equal highs and equal lows, I would definitely wait to see what happens. But in this case here, the same could go for lower lows, right? So in this case here, just for illustration, I'm not talking about reversals. I'm just showing you what continuation looks like for lows. So in this case here, this is a sell, right? Sellers came in, they came all the way down here. We wait for price to retest this previous area here. It does that. We say okay, and what do we wait on for us to say okay? We're gonna, if we're selling from right here, which would technically be a lower high, right? If we're selling from up here, then we want price to actually come down, close below this low, and come down to the next low, or whatever the case is, that happened on the left as well. So that's also how you identify what the how you identify getting in for sells and things of that nature. So you want to wait for price to create a lower high, get in at the top, sell down. If it creates a new low, then we know that price is going to close below it once it gives us this confirmation up here for this lower high. So we're not necessarily waiting for price to close below the previous low, because if you do that, then you kind of miss the move, right? And that's not to say that each impulsive move is always going to look like this. Sometimes they're just one big candle, and then you just got to wait for that retest back up to this area here. But in this case, what I'm saying is that you want to wait for the lower highs first before you look to target previous lows. Okay, so there's that. Now, when looking for continuation trends, we're looking for price to create higher lows, buys, and or lower lows for sells. We need price to close above higher highs and create higher lows. We're looking for price to close below lower lows and create lower highs before accepting continuation, right? So again, in this case here, we want price to, yes, close below the previous low, but come back up and retest that area that it just broke below. So because I missed this impulsive move to this impulsive move down, because it did close below this previous low here. It closed below it. Now I just have to retest it, wait for that retest, and once it gives me the retest, then I can say, okay, we'll just go ahead and ride price down from this point and just target the next low, since we've missed this opportunity here, right? And so on and so forth. So I hope you guys understand. If you have any questions, or we meet on, if you're one of my private mentor students, if you have any questions, you can always just reach out. And if you're not a private mentor student and we meet twice a month, then you could always ask these questions when I see you. Okay, so that's what continuations are. You just want price to close above the previous high or below the previous low. And once it does that, then you just wait for the retest and then target the next high or previous low that happened on the left. So always look back to see where price went, so you can know where it's going. Okay, now I hope you guys understand that. I know it's a lot and I don't want to overwhelm you guys, so this is actually the last thing: market reversals. So market reversals are obviously the market reversing, right? When looking for reversal trends, we're looking for price to close below a higher low. In this case, this candlestick here closed below. And remember, I said you have like equal highs and equal lows, so let's just make this equal. So if you have an equal high or equal low, you just have to kind of wait for price to make its decision on where it wants to go. And in this case, oh God, my goodness gracious, this is really starting to piss me off, y'all. I'm sorry. In this case here, this was the higher low. Price decided to close below it. We're not going to necessarily count that yet, only because what if price just decided to do something weird and just close all the way down here and then shoot back up, right? Because then at that point, this equal high and this equal high would now be invalidated, and it's just going to create a new high. That's not the case here. We wait for the lower high to be printed. Once the lower high has been, solidified in the market, then we could say, okay, we're going to start looking for sells, because price hasn't necessarily closed above here. It might have gave us a few wicks at this area here, but we're not the wicks tell the story of what happened and why price decided to continue to go down. So the wicks at key levels are important, yes, and we'll get into that next week too. But in this case here, we really just want price to create a new low. And so since it did, it gave us a new low. Okay, we have this lower high. Let's go ahead and get in for a sell. Look for the previous low to the left. Target that. There's your TP. Oh, you missed this opportunity? Okay, we'll wait for price to retest. If it chooses to, it might continue to come up and completely invalidate what this lower high could have been. Who knows? So you really just have to watch the behavior of the market. You have to watch the behavior of the candlestick. There are a lot of moving factors, and so I try to find a way to make it easy for you guys to spot in the market. You really just want to wait to see if price decides to close below a higher low. You are then waiting for market to give you a lower high. If it decides to if we're looking for price to come, like let's say it's giving us an equal low right here, right? And so that's why M's and W's I feel like are important in the market, because those are kind of your signals to pay attention to see if price is getting ready to reverse or continue, right? Because price could give you an equal low, it consolidates, right? Like I said, on the buys, and then it continues down, right? But we're talking about reversals. So let's just say that price is just kind of consolidating now that we've had this impulsive move. If we want to look for buys, now we have to wait for price to come above here. We're waiting for price to come above here, to close above here. And once it does that, now we're waiting for price to come down here and retest this area. So at that point, this then becomes a higher low after it gave us this this new high up here, right? And then you just have the market repeating the same pattern in waves, right? So you have it close above here, right? It closes above here, and once it does that, it's going to retest, and now you have a new higher low. So now you've transitioned from lower highs, lower lows, lower high, lower low. It gave us equal highs, equal lows, and then gave us a higher high. Then it gave us a higher low. So I'm going to go ahead and label these for you so you can see them. So I know it seems like I'm just kind of like talking a bunch of gibberish because this stuff is kind of complicated, but once you understand market structure, price action and market structure go hand in hand, and price action is just pretty much how is price acting within the market and how is it responding to the market structure, in so many words. So I'm sorry, all this app has been acting weird. Okay, so we have this new high up here, and there you go. And then again, price could say, oh, we're just going to stop right here. We're not going to give you much of anything right here, right? We're just gonna sit around here. We're not gonna really give you much context right here, right now. And you know what? We're just gonna consolidate for a little bit. So now it's consolidating. It doesn't want to give you an up or down. It doesn't want to say, oh, the buyers are in control. No, the sellers are in control. No, the buyers are in control. No, the sellers are in control. It's gonna go back and forth, right? So it gives you this noise. And then eventually the sellers come in and say, okay, we'll come in and take control now, right? And as you can see, there's a bit of a consolidation phase happening because that's what the market does. The market doesn't ever just go up, down, up, down, up, down. No, it goes up, down, consolidate. Down, consolidate. up, down, up, consolidate. It does that. And you really just have to be able to spot these particular those consolidation phases in the market, because when you're able to do that, you are then able to identify market structure in its truest form, in its rawest form in the market. So we'll leave that how this is, and we'll change this to red. Boom. So now we've had equal highs up here. Price had not closed above it. It's not giving us any indication that it wants to close above it. And now we have this lower low that was just created in the market, right? And how does it get validated? Again, we wait for that lower high to pretty much confirm that the lower low is true indeed, it's accurate, it's valid. Lower high was confirmed. The buyers tried to regain control, but the sellers are defending this area, and so now we are going to ride price down to the previous low, and then you wait for price to break, and let's say that this is the area right here that you want to revisit, and technically you're targeting the previous higher low, or which was also a lower low at some point, right? And so, give me a second. I'm trying to make it to where it makes sense, and it looks like it makes sense. Okay. So you have your lower low here. This was created. Now your lower high confirms what the market just showed you. We have price coming down to this point here, and then boom, we'll ride price up, give you a new low. And then price might decide to change its mind, flip the script again, and say, maybe the sellers are ready to come back in, whatever the case is, so on and so forth. So I hope you got an idea of what market structure looks like. Trend reversals, trend continuations, things like that. There's only so many examples I could show you with continuations, only because then it can easily be misconstrued, or a level of confusion for possible reversals. So we don't want to do that. But in this case here, this is what market reversals look like. You have price close below a previous higher low. It creates a new lower low. You wait for the lower high to determine that it is indeed, the bears are indeed in control. We get in up here, even if there are a bunch of wicks just kind of sitting up here at this area here, right? You might have a bunch of wicks to come in and try to, it'll take you out. It might stop you out first before it gives you any type of indication that it's getting ready to head down, and you might get caught up in this right here because you're waiting. You think price is going to continue to go up. When the market pauses, you pause. When the market moves, you move. Those are the rules, right? So trend continuations and reversals are most effective at key levels and higher time frames. So I highly recommend paying attention to the daily, the 4-hour, and 1-hour time frames when it is in regard to looking for trend reversals and or continuations. Key levels at that time frames also matter too, so you have to be able to just understand that and accept that. Tip number 2, when reversals take place, wait for break and retest. Wait for price to break and retest the key area that has been broken. So in this case here, we're waiting. Price broke below. Not only did it break, it closed below this higher low. But I'm not just going to go based off of that, because if I would have just gotten in down here, now I'm a part of the correction, and I don't want to be a part of it. I want to be a part of the impulse. So now I have to wait for price to give me a signal. And in this up here somewhere, right, just for context, something right here could very well be a level of, there could be some type of consolidation up at this area here. But we won't know until we go into the charts and look and see that, oh, okay, There was a bunch of noise right here and price just broke out below it. There was a bunch of noise up here and price broke down below it. So you really just have to wait first before you just start hopping in the market. Just because you see the impulse does not mean get in. At that point, you've missed it. Wait to see what the market is going to tell you is going to happen next and then get in on the next move when the opportunity presents itself. And waiting is very ghetto. I want to make money too. But if you rush, you actually lose more than you make in the market. So since we have these notes here, you can rewind, go back, take notes, draw it out if you'd like. But this is pretty much this week's lesson, market structure, continuation reversals. Let's go to a chart real quick, and then I am going to be done. We'll try to do this in like another 5 minutes and then call it a day. I hope everybody's having a good Memorial Day weekend or Memorial Day today. Be safe out here. Don't go out here acting crazy. Have fun and get ready for work tomorrow if that's what you gotta do. Kids are out of school, so that's good. Okay, y'all. Alright. So let's go to gold. Let's see what happened there. Alright. So I'm not going to say that I'm wrong on this, but I'm not right. So that's fine. Let's go ahead and remove. And let's clear these. These are all my alerts. Okay. So with gold, let's go to the daily really quickly. I'm going to make this quick. Okay. So you see right here, like you kind of have like market structure. You have, this is a previous high, higher low, lower high, lower low, lower high right here, lower low, lower high. No. Lower high, lower low, lower high. So we are on a daily time frame. So right now, in order for me to identify, right now it seems like the market is in a bit of a downtrend. Let me actually change the background real quick. Okay. Market is in a bit of a downtrend right now, right? So you see here that there's a bit of a downtrend happening. And I guess you could say on this time frame here, there's a bit of consolidation. It's really not much of it. It's a trend, but can't really tell. So let's go to the 4-hour. This is a little more realistic. It's a little, the context is a little bit clearer here. So okay. We're going to set this support here, and then we're going to set, resistance here. We're going to set support here. So right now, price is just kind of in between these two major levels for me. I'm going to put a key level here. Actually, let me just do this. Okay. So right now, price seems to have shifted from Um, let's see. What's this? High, lower, low. Okay, so I'm just trying to find something that makes sense. Give me a second. It's just like nothing's making sense right now. Okay. All right. So right now, price seems to be in a bit of a downtrend, right? So the thing is that price has been lower high, lower low, lower high, lower low, right? So right now, we're kind of having to wait on price to give us some type of indication that it wants to go back down. But as you can see, and these are live markets, number one, the market opened in a gap. So it gapped up, right? And I'll show you guys how to trade gaps a little later down the line. It's really not that much of a difference. The gap pretty much is just another way of looking at the market as a level of support or resistance. So in this case, technically, this is a level of support until price does something otherwise to prove otherwise, right? So in this case here, price gapped up. So I'm going to make this green just for whatever. And right now, price isn't really giving us much of anything. It's in consolidation, right? So in this case, I don't really mind if price decides to come up this way, right? Or if it decides to come down, retest, and come down this way. Like, it really just depends on what it wants to do. So until it makes up its mind, I'm just going to go ahead, set an alert outside of the rectangle. So whichever direction it chooses to go in, I don't personally, I don't care as long as above or below this level. So I'm not really going to give much of an analysis of where price could go because I don't know. Right now it's consolidating and there isn't much context here for me to um I'm sorry. Um that's pretty much what's happening right now. So in this case here, what we have to understand is that we're just waiting for price to make up its mind. It could go up, it could go down. It really, there's no telling what price is going to do, right? So in this case here, we really just have no choice but to wait, unfortunately. And that's the part that a lot of people don't like. People don't like to wait. And I get it, especially when you're just ready to make the money. Like, anybody that says trading is not about the money, it's like, okay, I'm not saying that it's all about it, but what I am saying is that there's some truth to that. Like, it doesn't have to be all about it, but it kind of is. Like, that's the end goal. Nobody's just doing this to to sound smart all day. They're doing it because they want to get something out of it. So, um, at this point here, I'm just waiting to see what happens. And if price decides to close below, we'll get it for sells. If it closes above, we'll get it for buys. That's it. So that's pretty much my. So if it, and just to give you some context, so like right now, price gave us this lower low, lower high, lower low. Right now we're kind of at equal highs right here. So if it closes above here, this then technically, let's just say it comes back up to this area here, right? Then we could say that this price has then created a new high. But in order for this to be validated, I need to see price come back down here first before I even think about trying to get in. Because if I get in up here, I'm going to get caught in all of this, get swept out all right here, and then it'll go in my direction. I might as well just wait to see what happens, right? So if price comes up here, gives us this new high, gives us this higher low, then I'll feel comfortable targeting the next high because it's kind of giving me the indication that it wants to, or indication, impulsive move, whatever, one way or the other, it's giving me the clue and saying, hey, we wanna go a little higher. since it retested it and it's gonna close above it. And you could get in also if you're waiting, if you're just like trying to be like super cautious, you could get back in up here, right? But then you would have to kind of wait for a retest to take place here too. So I'd rather get in down here if I'm looking for buys, target this level here for stop loss, and this would be my target for buys. Simple. It's very simple. So we try not to overcomplicate it. I know I gave you guys a lot of information, but you have the ability to just rewatch and rewatch and rewatch if that's what you want to do. I don't know what direction gold is going to go into. It could go up, it could go down. I really don't know what it wants to do right now. At this point, all I can do is just wait and see what it does once it gives me some type of clarity outside of this consolidation phase. So I'm going to go get my life in order and whatnot. I hope you guys have had a good holiday weekend, and we will see each other Thursday, and we will kind of go from there. So I will see you guys. If you're a paying student, I'll see you Thursday. If you are just getting like the information and stuff from me for now, we could always we know that we meet twice a month, and I will be sending out emails on what those dates will be for the next month and some change. So see y'all later. Bye.